I failed my funding account. I was in the second stage after passing the first stage, obviously. But yes, I was in breach of contract, where basically there's a rule where you can't be inactive for 30 days, so about a month. And there was a month period where I didn't place any trades, and so I lost the account. So we're going to go through what happened from the start of the account, from the first stage up until now, and the things I've learned to pass on to you, and what I'm going to be doing next. So stage one, I went into Drawdown initially. I took a couple of trades, and I did make some mistakes. I made some mistakes. I took a couple of trades, and it put me into Drawdown, but only by a couple of percent. Now, my risk management when I was at this point, so that's one thing to note, is risk. This is going to be really badly handwritten, sorry. Management. So at the start, it's 1% for me. I don't risk more than 1% at the moment. I am not a trader that's confident enough to do that. I do not trust my ability enough to do that. It might be something that I change as I go along, but if it was, I would never risk more than 2%. 2% is certainly more than enough. But yeah, at the moment, it's just 1%. However, when I go into Drawdown, when I go below a certain point, which I think is 2%, after 2% Drawdown, I go to 0.5% risk. So I don't lose the whole 1%, I only lose 0.5%. Then if I lose 2 trades, that takes me down to roughly -3%, right? So if I go to -3% in Drawdown, I then risk, or less than that, I then risk 0.25%. And that means that it gives me a lot more of a buffer. So if I lose more trades after that, I'm not, tanking closer and closer to the amount that I, the max Drawdown rate. So that's something to note. And that was something that really helped, especially in the second stage. That really helped my psychology, or not to feel so panicked about, like you don't think, crap, I've only got 2 more trades to lose and then I lose the whole account. You don't have that effect. But we'll come on to that in the second stage, because that's when it really came into play. So I only got 2, excuse me, not as much Drawdown in the first stage. And then I took a trade. It was a really good trade, and it lasted about a week, and it took me up, I think it was like an 8% win trade. Now I needed 8% to end that stage. However, because I was in Drawdown, I needed a bit more than that. So it took me a couple of days after that, and then I got a 4% trade after I took a loss, and I think I was like $15 away. So I tried to take a trade very quickly, which was a silly thing for me to do because I didn't look. I just placed and hoped, which kind of made it a bit wobbly for a bit, and then I got the trade that I needed to pass the first stage. The first stage took me about a month. Yeah, I think I started it in May, June time and finished it around July, early July. It took me about a month. I took 16 trades. I can do that. 16 trades. I had a 31% win rate, which is incredibly, incredibly low. But my biggest loss was this was on a £50,000 account, by the way, $50,000. That was my biggest loss. My biggest win was 2,085. This loss was a bit more than 1%, as you can see, as a $50,000 account. This was a bit more than a 1% loss. That was my mistake in I think it was the lot size for the stop loss that I was using. The lot size was a bit wrong, so it took more than 1%. So that's a bad thing anyway. That is something that is something to be really cautious about, making sure you're getting your numbers right, because if you're, especially if you're placing a trade that's going to take you to profit and you don't do enough, then you're not going to get the amount that you need. And I did do that on the first one too. I'd cut it off at the exact amount I thought I needed to win on the account. Because of spreads and because of commissions, it fell short by $15, right? So you don't want to do that. You want to be really sure that your numbers are correct, or go yeah, just be careful of things like that. So that was one thing I needed to note is don't go to the exact number unless I know I've got it right, and be careful of the commissions and spreads. So that was a learning curve there. Just, make sure that you get the numbers right, especially if you end up risking more than 1%. That's not a good thing, because then it hurts the psychology if you lose that trade. So as I did here, I lost that trade. But the biggest win, that was the win that, that 8% that got me back out of drawdown and close to finishing my target. But with a 31% win rate, that's not so good. However, I did make some mistakes. I did jump into trades that I shouldn't have taken. I took some trades on an ego base. I took some trades trying to chase the account. So because of that, there are things that I can iron out, right? It's not like this is my plan, I stuck to my plan really well and I've got a 31% win rate, because then it'll be needing tweaking a bit, right? So that was sticking to my plan and then making some mistakes, 31% win rate, but passing the account, because my average win, so if my average loss is 1%, so that's like $500, my average win was 1,456. Which meant I could pass the account because my wins were so much bigger than my losses, right? So that's an average risk to reward of 1 to 3. 1 risk to 3 reward. Yeah, roughly, right? So that's really good, because that's how those numbers can play out. Which goes to show that you don't need a strategy that wins 100% of the time, even 90% of the time, 80%, so on and so forth. My goal right now would be to get that 31% closer to 50%. Or it would be to eliminate the mistakes, because that would naturally bring the number up anyway. I don't know how many mistakes I made, but it was a good couple. But, and that's with 16 trades as well, right? So, I mean, even with say 6 of those roughly could be the mistake, then that's whatever number. I can't do that math on top of my head. What's 6 as a percentage of? It's just under half, right? So it must be around 30 to 40%. So maybe let's say 30% of my trades were also mistakes. So I could easily, bump that number up, that general win rate up quite a lot just by doing that. So made mistakes, but I passed that. That was all good, hunky dory. Struggle, but did it, and that was 8% needed to pass that funded stage. The second stage, I only needed 5% as a target, and I still had, I think it was 8% drawdown. I can go to 8% until the account closed out. And I still applied the same way, and if I went down to a certain amount, then my risk would be, from 1% to 0.5 to 0.25. And there were 2 main strategies I was trading at this point. There was one that was a trending with trend, so I'm looking for like flags basically, and there was turtle soup, and that's basically where you have the Asian range. Looking at the Asian range, so say price moves up, and in the Asian range it ranges, and then when you come out at the Asian range into the London Open, so around 8 o'clock, if it breaks the high, breaks above, and then it closes in, then I'll take a sell to this area, so targeting that moving down, and vice versa. If after the London Open it came down to this level and broke back up, I would, take a buy to that level, so on and so forth. Those were 2 strategies I was trading, and that's what passed me my first phase. However, I got really excited and way ahead of myself and thought, okay, well, I've got those. Why not add more to the bank? Because it's fun to learn to trade new things and fun to, see the results from different things. So I did. So I looked at the silver bullet from ICT. It was a fairly simple enough concept. And I understood what was being said to me, but I did not test it properly. I did not put in the work to I had a plan, but it wasn't back tested so well that I knew it was solid and knew exactly what I was looking for. I was more partially back testing, partially forward testing. And that meant that I took a lot of losses in a row. I think I ended, before the account closed out, I ended up with like 7 losses in a row. And by that point, I was very much at this stage risking 0.25%. And I think it was after I had lost 5 trades in a row, 4 or 5 trades, I thought, this is really dumb. I'm just throwing away money at this point because I was missing a lot of the winning trades, but taking majority of the losers. So let's see, what could I write this as? Stick to what works. Sorry for my absolutely scruffy writing, but stick to what works. Learning and adapting. Don't run before you can walk. Don't run before walk. I was just about walking. I was definitely crawling. I was starting to walk well, but then I tried to run straight away. And by saying I was able to walk well, or like getting to be able to walk well, meant that I was doing this somewhat efficiently, but as I said, I was still making some mistakes. If I'm still making mistakes, I shouldn't be trying to add more things to my arsenal, because if I'm making mistakes here and here, then with a new strategy, even though I know these two, obviously I'm going to be making more mistakes than needed, right? So I should have just taken my time, traded casually with these two, and by casually I mean trading them as I was and doing the work that I was already doing that made me successful to pass the first stage, right? And then in my spare time, in the other parts that I was doing, learn a new strategy and just doing the work behind the scenes, but leaving the account alone, leaving my funded account alone, because we know this works, stick to this. We don't know, I didn't know that didn't work. Or yeah, I didn't know how to make the other part work, so I should have just stuck to that as a learning thing rather than a trading thing, right? Having more of an understanding before I jumped into it. But I think that was just purely ego at that point, because I knew I could trade. I knew I have a deeper understanding now of trading itself, not the strategy of trading itself. So I thought I could just apply the strategy, and I got my ass handed to me, basically. So going deep into drawdown, there's one thing when you go into drawdown because you're sticking to your plan, but probabilities are playing out and you get taken into drawdown. There's parts where perhaps you take trades, 5 of them are right, 5 of them are wrong, but if you get 5 wrong in the row, that can happen, right? Just because your win rate in your thing is whatever percent, it doesn't mean that it's going to be win loss. Those wins and losses can happen at any point and in any way, right? So because of that, because it wasn't my plan that was working, that was taking me to drawdown, it was my own silly fault, my mentality kind of just went boom. And this showed because my routines in Forex, my candle analysis in the morning, where I review what happened the day before by putting the retracing time and then clicking forward hour by hour to see what happened and what each candle was telling me, what led up to the point we are currently at now. Doing that sloped off. Doing my forecasting sloped off. These two are so key for me, because again, when you look at the market, you can see and possibly understand what's going on in the moment, but it really helps twofold when you build up to that point. So you develop a deeper understanding because you have said, okay, well, this candle's doing this, which means that this is then doing that, which means that this candle meant that, and so on and so forth. When you build up to a point like that, it really, yeah, the understanding feels much deeper rather than just looking at it and being, okay, well, this is a channel, I know that this means that. But when you say, okay, well, this is a channel because I saw it do this and that, right? It helps it a lot more. So when I do my forecasting, I'm a lot more accurate because I know why we are where we are. But my forecasting sloped off as well. Like I stopped doing that as much. And this is supposed to be a daily occurrence, like doing this in the morning before I start my trading day. And they just sloped off because my method of problems is avoidance, I don't know. I avoid my problems when they get too much and I don't know how to deal with them. I run away from them, and that's something. There are different methods of I don't want to say methods, that's the wrong word to use. Coping mechanisms, that's what I should be using. There are different coping mechanisms. There's like avoidance, there's some people bury themselves in work, some people confront other people because that become confrontational. I can't remember what. There are some other ones as well, but basically we all have our ways of coping mechanisms, and mine are avoidance. So I'll avoid doing the work I need to do, so I don't feel the pain of doing it wrong or being in the wrong place, Because it's uncomfortable when you're doing the work but not seeing the results. So to deal with that uncomfort, I just shy away from it all, right? And this comes in forms of, you know, being on social media, gaming. That's kind of it, really. Those are my main things, right? Or just doing other work that isn't really necessary just to fill time, right? I have, or just simply not. Well, yeah, you fill your time. If I don't do it, I have to fill my time with something else. So I end up filling my time with junk, basically. So sometimes I can tell it's not so easy. Like, it's easy to say, okay, well, I didn't do my candlestick analysis or my forecasting today. It's easy to see that and say that. But sometimes it's not so obvious. Sometimes little things slip here and there, and you don't catch it until it becomes such of a problem that it's really noticeable, right? So one way to know when things are going slightly wrong is know what your coping mechanisms are in terms of avoidance or the whatever. Let me see. I'll see if I can find it whilst I'm yapping. Know what your coping mechanisms are and see what that entails. So again, for me, it's social media or gaming, and see if you're doing more of that. Because sometimes if I'm in a really good, not workflow, but if my days and weeks are going good, if I'm in a good place, then I'll be less on social media and gaming and I'll be more into my work. But when social media or gaming starts to creep in more and more, then that's when it's telling me that there is a problem coming in. That's when it's telling me that, you know, there's something that I possibly should be paying attention to. Ah, yes, here we go, perfect. So you've got the distractor, the adapter, controller, computer. So inaction, reaction, protraction, distraction. Yeah, so I'm distraction. The reaction, yeah. Reaction is when you become controlling, confrontational. Inaction, you just adapt to the situation that you're in. And, so instead of pushing back and saying, no, this is wrong, I need to do this, you just adapt to the situation. So out of those, figure out which one you are and what the signs are of that. So for mine, social media and gaming are things. So sometimes I don't know there's a problem, but I notice myself being more on social media or playing more games. And that's a key to say, okay, well, there's something that's not quite right here. I'm avoiding something. What is that something? And it might not be Forex related, right? It might be something in my life or something that I'm not doing or addressing that's having an impact on other things that then cascade because I'm on social media more or avoiding what I should be doing more. It means it eats into the other areas of my life. So I feel bad for, missing out on those. And the problem becomes bigger and bigger and bigger. Although the problem started over here, it's now grown into or spread into the other areas of my life. And so on and so forth. And when you're trying to sort it when the problem's big and all the way up here, it's because there's actually a niggly problem all the way down here. But it's how problems grow and how and when you spot them. So my problem might not have been the fact that I was in drawdown. It might have been because, and this is actually one thing that did happen, I was becoming very overweight. I was becoming very inactive. I was active, but not in a way that was complementing how much I was eating. So I had active evenings, but not actual full exercise. So I had put on more weight than I have done ever in my life. I was the heaviest. I think it was, in September, I was the heaviest I had ever been in my life. And I could see it as well. It was getting very visible. And that was playing a toll. So I had all these things going on because of a problem that I hadn't addressed. So without going to, because we're at 20 minutes now, I don't want to sort of waffle on too much about that. But it cascaded, right? There was a lot of things that were going wrong. So that's where I am. So where I am right now. Where am I right now? This. Where? I started going to the gym again, and that lasted for about 2 weeks, and now I lost that again. So in and out, I'm trying to be more active, but I'm not so active. So where am I? My routines are out, exercise, I can never spell this word, equals inconsistent. Trading in itself and all the things I need to do with that is barely there. Like the routines I'm doing for that are like not there. The reviews that I have been doing are not there. The trading is, I'll just put bad because it's just bad at the moment. Not the trading, yeah, everything about my trading right now is bad. I'm not a trader right now. I'm not acting as a trader. So where do I want to be? Where to be? Obviously, the opposite of all of this. I want strong routines, consistent exercise, and good trading, and to be a trader. Strong routines is the start of it all, because routines are like how you start, right? It's how you start your day. What are you doing? And then that builds into it consistent exercise, because exercise can become part of your routine. And when you're exercising well and your routines are right, you can be a good trader because your trading routines are good in place. You know what you're doing and you're keeping everything on top, right? So to do this, I am going to be looking at what my routine wise, when everything is really hunky-dory, best case routine. So that's when I'm hitting everything. But a good routine with a lot of things takes up a lot of time. You could spend 2 to 3 hours having a morning routine. So having all the time and all the things in the world, what is my best case routine? And that could take, and how long? And time. Because again, it does take time. My candlestick analysis and my forecast takes about half an hour. And then when I do all the other things as well, it easily becomes an hour or two, right? So I need to be aware of the time that takes, because what time I start in the day has a big impact on what I can actually do, because I don't want to be spending literally the whole morning up until midday doing my morning routine, because then half the day is gone and I'm very slow in the evenings anyway. I can't do deep work in the afternoon. I really struggle with it. So, trying to rely on that time is really going to kill my progress, right? So it's knowing things like that as well. Okay, do I need to shift things around? Do I need to have, because so many parts of my routine is key and important, it's hard to just be like, on a best day, do this, on a worst day, do that. Because when you strip it back so much, it still leaves things that take time. Again, the candlestick analysis and the forecasting and my golden sevens, which are another thing for 5 to-dos, you've heard about that, where I basically journal, write my goals for the day, affirmations, gratitude, my values, and then I also write the 10 commandments and the verse of the day. That takes about 50 minutes, half an hour, so depending on how distracted I am in the moment. So because of that, because those 3 things take time, it's still going to be half an hour, 45 minutes to an hour. Half an hour, best case, if I blast it out. But on days that are bad, it's more likely to take an hour because I'm easily distracted. I'm struggling to sit down and focus. So it easily takes an hour. So, that's still a long time. And again, depending on what time I start that, if I'm having a slow day, then that has a knock-on effect. And the day, starts off, I try to do this thing, and then it just fizzles out very quickly. My morning is just routine, and the afternoon is absolutely me being burnt out because I'm just struggling that day. So I can't do best case, worst case. So I need to do something else there. So I won't go into that in this video because I'm already 26 minutes in and waffling. So that my routine will be a whole other video. I'm going to do a whole process on that as well and figure out what that process is, where I document it as well, documenting what works, why, what doesn't work, and why, and what I can actually change moving forward without sacrificing the parts that are necessary. Consistent exercise. I am doing an accountability thing with my current boss, who also needs accountability with exercise. I find that my best time to exercise is in the morning, in terms of because I'm sat down majority of the day, if not all day. By the afternoon, I do not have the motivation or the discipline at the moment to get up and go to the gym. The way I see it is because it takes 2 hours. Afternoons tend to go very quickly, so if I look at the time and the next time I can get to the gym is at 1 o'clock, then I get home at 3 o'clock, and I struggle to then get home because getting home at 3 o'clock doesn't mean I then have from 3 o'clock to 5 o'clock to do whatever work, and it's really hard for me to visualize the time blocking element By the time I've got home, got changed, done this, done that, it's 3:30, getting to 4 o'clock. Then I see that I've only got an hour till 5 o'clock till my brother gets home and, dinner starts and all of that. And it becomes very fractured. I like having time ahead of me to do things. So in the morning, before I've sat down all day, I go to the gym, which usually gets me home at 11 o'clock. But by that time, I see that I have lunch and I have the whole afternoon to be able to do things, to get into work and do the work that I need to do. But I cannot do that in the afternoon. So morning is the best time for me to go to the gym. I can do exercise in the afternoon if I'm at home or if I'm going for a walk, so I can just do a quick 15-minute thing or a quick 15-minute, half an hour home workout. But that's really difficult, and I like to have a proper workout. And at the gym, you feel like you're in that mood, you're in that zone. It's easier for me to actually do a proper workout. So this is something that, again, I'm still figuring out, because as I said, I went to the gym for about 2 weeks consistently and then it just stopped. So how I'm going to work that out, I'm not sure, but that is high priority, because again, it's very quick for me because I'm sat down all day. I need to be careful in what I'm consuming and making sure that I'm more active, and that means just going outside more. So this is something that I'm working on, ensuring that I do at least one thing a day. At least that keeps the consistency of doing something going, which is good, but not easy, right? So that's just a general progress thing anyway. And then being a trader. This is actually the main part, isn't it, really? Because this is a trading video, really. I am starting again. I will be doing another challenge. Now I'm aware of what my problems are. I'm only going to be sticking to the 2 strategies that I mentioned earlier. I will not be trying to learn any more at the moment until I am consistently trading the strategies, not making any mistakes, doing the things I need to do, sticking to the routines, doing consistent exercise and the things that I need to be doing to keep myself going and doing what got me successful for the first stage in the first place. Then I can be looking at adding more things. But for now, I do not need to be adding more when I cannot handle the things I currently have. I have a really bad habit of trying to add more things in, just because it seems like either a good idea or a fun thing to do. It is fun. I love learning. But I try and learn quickly and do things fast track. I've always had a problem with trying to fast track, so I need to slow down on that and just do what works at the moment and try and get the things that are working right and working consistently, and then we can look at adapting and changing and doing all the other things. I just need to slow down and say no more. No to myself. When you think of saying no, it's sometimes we think of other people asking us to do things or be a part of things, but I need to say no to myself a lot more, especially when it comes to the social media and gaming. I need to say no and just sit there and handle that. So that's sort of where I am with these things. So I did fail that account due to inactivity and my avoidance problems, but we live, we learn. I've got a lot more to learn on. I do kind of feel this relief of, I felt like I was in a rut with my trading because I put myself in one and then digging a hole whilst being in it, and it could be like, oh, how did I get here kind of thing. So that kind of, puts me, it's like I've been pulled back out, put on top, like, okay, got a clean slate. Start again. What are you going to do this time so you're not going to end up in the hole that you're digging? I'm not going to dig a hole to start off, and I'm making sure I'm not going to dig where my feet are, as a metaphor. But yeah, that's it. It was a good learning curve. The second stage is really difficult. That mentally anyway, because I only had to make 5%. That's 3% less than my first phase, and I did 8% in roughly a month. So you go into it thinking, okay, well, I made 8% in roughly a month. I can make 5% in less than that. And it's, although you shouldn't think like that, I did have this thought in the back of my mind thinking like that. And it was really hard to break away from that, really hard to not have those thoughts and feelings. So it was very interesting, but it's really nice to have had this experience and learn from it. So I will be buying another £50,000 account from Funding Pips, and being really cautious with myself and making sure that I'm not making the same mistakes. But before I do that, I'm going to be getting back into the habit and routine. So rather than buying an account where I am right now, because I'm still not doing the candlestick analysis or my forecast consistently, so I need to get back on doing that. I need to get back on doing everything else well, and then I will buy another account. I'm not just going to buy another account because I think I should, because then that leads into another trap. Like right now, I am not a trader, so if I buy an account right now, as me who I am right now, it's not going to go well. So I'm going to hold off until I am in a better place so I can do things well. It is better to wait and be patient. As we know with Forex, you need to be patient, but it's better to be patient and do things properly rather than jumping the gun and trying to get things done fast and slipping and throwing money down the drain. Because not only do you throw money down the drain, but you throw your mental down the drain and who you are, and you kind of chip away yourself. So it's better to build yourself up first and then go forth and conquer. So that's what we'll be doing. Yes. If you stayed to the end, don't know how, well done. But yeah, that's all from me on this video. Thank you all very much. I hope you're all having a very good day. I look forward to seeing you all in the next one. Thank you for bearing with me. And yeah, as you can tell with my lack of YouTube videos, I'm very inconsistent. I'm working a lot on myself and it's really hard. There is a lot to work on, and let me tell you that. So we covered like dusting on top in this video, but yeah, there's a lot. So we're getting there slowly but surely, but it's all part of the process, isn't it? Yes. Bye.